Hello, this is Brian Rezny, president of Rezny Wealth Management. We have a big TV and radio show this weekend. Make sure you do tune in. As always, when I do these update videos for clients, I like to keep you in tune with what we're doing, what we're seeing, and really information I think you need to hear so that you feel more confident and comfortable, not only with our management, but overall with your retirement security. You know, I've done a number of in-office reviews with clients over the last month or so and phone reviews in addition. And one thing that I've always done with every single client when they do come in or talk to me on the phone is, are you listening to these update videos and are you enjoying them? And overwhelmingly clients say they're listening to everyone and they love them because the content is quick, it's easy to understand, and it keeps them in tune that we're doing our job so you can be basically doing what you like to do, which is be retired for the most part. Now, we had a little bit of a sell-off in the market, and I warned you that we're going to get a pullback before year end, which we did, only to recover that pullback pretty much as of today. So Nvidia came out with earnings yesterday, and it's a stock we do own in managed accounts, and it's done quite spectacular year to date. There's a lot of talk about market breadth and how some stocks are participating in the market and some stocks are not. I'm glad to say that the stocks that we own as a whole are participating quite well, and our clients have done exceptionally well year to date. And again, the reason we feel that's happened, a lot of research by my staff and myself, positioning our client portfolios for growth in the U.S. economy. Now, we want to be properly diversified, but we also want to be in areas that are truly growing. And it's interesting. We have no clients, when we have these pullbacks, generally speaking, 5 or 10 or even 20% like we saw back in April with the tariff scare, we really had no clients that call us and say, oh my gosh, is the world coming to an end? And I think the big reason for that is these update videos. We want to make sure you understand volatility is normal. Your portfolio is not going to keep going up every day. It's the old go up 6 steps, come down 2 in a normal correction, go up 6, come down 2, and you keep repeating this. So just kind of remember that as we go into year end and certainly 2026, which we may have similar volatility as we saw this year. We got through it, and your portfolio essentially is at new high ground. I think one of the big things that Jason from Nvidia, which is their CEO, AI demand, and I want to talk about a couple things that he basically said, insatiable. This is the CEO for Nvidia, and basically on the conference call yesterday after hours, talked about the demand, and they're sold out for the next 12 months. These are semiconductor chips that are going to run a lot of the supercomputers and so on. This is vitally important for the growth not only of our economy, but the world economy. But there's been all kinds of talk about AI bubbles, okay? And you're probably hearing some of this. We're in a tech bubble again, like in 2000. Folks, no, we're not. But you're hearing this from various Wall Street people, hearing it from the news media. It's this constant bubble, bubble, bubble. After the 2000 bubble, and by the way, I was managing money when the tech bubble hit. I was in the market, and I was managing money in '87 when we had that 30% drawdown essentially in a day. So I've seen pullbacks, I've seen market corrections, and I've seen bubbles. I remember like it was yesterday, the bubble of 2000. And I'm glad to say we did not get involved in a lot of these crazy companies that had no earnings, that were trading at nosebleed valuations. The difference today, folks, is the companies that are going up in value are not massively in debt. Some have no debt, but they're not massively in debt. They're actually selling product, and their valuations are very reasonable given the future growth of earnings. That is the most important thing I want to stress to every one of our clients. We look for companies or areas of the economy that have growing earnings. Earnings growth adds to the opportunity for that share price to go up. Negative earnings, lack of earnings, things will go down. Also, by the way, last night, Target stores announced their earnings. We do not own Target, and I would not buy Target, but their earnings were horrific. There are no earnings. They're not growing earnings. Their earnings have actually been negative. So what has the stock done? It's collapsed over 50%. So some people would say, well, the stock's down 50%. Should I buy it? No. If they don't have earnings or earnings growth, that's not a great opportunity. So we're going to stay within things we have. We're doing further research on things we want to trim. We're going to do some tax loss harvesting, potentially, but we're going to do it correctly. One thing I want to stress to every client, every investment we buy isn't going to go up. If we have a 70, 75% plus hit rate positive, your portfolio is going to do exceptionally well. Our hit rate's been much better than that this year, but we're always going to have some that don't do as good or some that go down, and we'll harvest those as necessary. But that's something that's part of the portfolio management structure and how we manage client portfolios. So again, no AI bubble. This isn't 1999.com 2000. We're not seeing any of that at this point. The big issue that we've had in the overall semiconductor area is really semiconductor bottleneck. It's not lack of demand. It's really getting these chips out. There's such high demand for chips right now, they can't make them fast enough to get them out. So earnings provide leadership and profitability. This is what grows stocks. This is ultimately what's going to grow your portfolio. We remain firmly invested in the U.S. stock and the U.S. marketplace in general, not only across the board in stocks, but also on the bond side. Why? Unmatched resilience, innovation, leadership, multi-year growth opportunity. The runway for AI is going to be many, many years out. This is going to take a decade, if not multiple, but even as it builds out, it'll get improved, it'll go up more. There's going to be a lot of infrastructure that's going to be needed in the AI space, which is going to drive the overall U.S. economy and the world economies. The U.S. still is the best place in the global neighborhood, in our opinion. Healthy resets like the one we saw, not only from the tariff talk in April, but the one we saw in the last couple weeks, these are opportunities. We're fully invested in our client portfolios right now, and if we do have new money coming in, we'll put that to work as necessary when we feel it's appropriate. One thing that I say to every investor on my TV radio show, learn from others' mistakes. It's less costly to you. We practice what we preach. I watch the carnage from these other advisors, the talking heads on TV. We don't get involved in chasing what's hot. We don't get involved in chasing Bitcoin. Just because firms are selling investments in Bitcoin doesn't mean it's a good investment. Just because an investment goes up 300% in a week doesn't mean it's a good investment. There has to be a catalyst. So the key with your portfolio and our management of your portfolio is make sure that we stay measured, we keep bias out, we keep the emotional attitude out of the equation. We do a lot of research. We keep you well informed. We want to keep your portfolio moving up 6 steps, come down 2, normal correction, and 6 steps up again, and repeat the process. Make sure you listen to my live radio show this weekend. And also, do me a big favor, clients. If you know anybody who's not receiving the kind of money management you're receiving, we love your referrals. And please, I ask every client, when you're done with this video, reply back on the email that you did listen to it and you want us to continue this type of video for your education and your financial benefit. Have a safe and profitable week.